Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look ahead to the May jobs report here in the U.S., what it means for Fed policy moving forward. I'm Tom Busby in New York.
I'm Stephen Carroll in London, where we're looking ahead to an expected rate cut from the European Central Bank and what might be unexpected in the European Parliament elections.
And I'm Brian Curtis in Hong Kong. We look ahead to China's PMIs and the Computex Taipei event featuring a number of AI heavy hitters.
That's all straight ahead on Bloomberg Daybreak Weekend on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, DAB Digital Radio London, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good day to you. I'm Tom Busby. We begin today's program with the May jobs report. This Friday, we get non-farm payroll data, 8:30 a.m. Wall Street time. The big question, what does this mean for the next Fed meeting in June? And for more, we're joined by Michael McKee, Bloomberg International Economics and Policy Correspondent. Michael, what are you expecting to see in that May report?
Can I change your question? What does this mean for Fed meetings down the road? It's not going to mean really much of anything for the June meeting because members of the Open Market Committee have already said we're not going to do anything. We need several more months. Yeah. But if we see stronger than anticipated payroll growth as we have been getting, that's going to worry people on the Fed because they are beginning to wonder if growth is going to come in stronger than anticipated and keep inflation pressures on. So they'll be watching the payroll numbers. They also have to watch it from the standpoint of, are we going to see a real slowdown and people starting to lose jobs? So there's a two-way risk for them as we go into this. Right now, economists are generally splitting the baby in half, as it were, by saying we're going to have about 180,000 or so jobs created, which is still stronger than the Fed wants to see, but it's down from those way over 200,000 numbers we were getting. And they're not seeing any change in the unemployment rate.
That's 3.9%.
3.9%.
Steady. But the 175 that we saw added in April was lower, maybe not a lot lower than what we were expecting. So there could be a trend if we see another 180 or so.
It would suggest that the Fed's medicine is working and that the economy is slowing down. Labor demand is slowing down. What we haven't seen is any sign that companies feel they're overstaffed at this point. Jobless claims just continue to stay in roughly the same range. So you would think you would start to see more layoffs before there was a recession. That's historically what's happened. But at this point, we're not seeing a huge number of signs. The Beige Book came out last week, basically said companies are slowing their hiring and they see less demand for labor, but they still see demand for labor as opposed to getting rid of people.
Now, are we seeing specific groups of people? We know summer's coming, so we know leisure and hospitality is going to move up. But if we're seeing growth there, we're probably going to see a pullback in some others. I mean, are we seeing less construction cranes in the city?
Well, it's interesting because this all gets tied up into a number of different things. One is the change in the way people work. Is it going to be harder to hire summer help? Or are you looking for summer help? Who sits at a computer? Obviously, the lifeguards and the kids putting you onto the amusement park rides are going to be needed. But they adjust for that in the data because they know this is the time of year when that happens. One thing we do see often around this time of year is some funny numbers with teachers and education because school comes to an end, but it comes to an end at different times across the country. And so those numbers can go up and down. And then there's this whole question of immigration. And you've heard the arguments that immigration has been supplying a lot of labor, whether legal or illegal. And that would weigh on what you mentioned about construction workers because many construction workers are undocumented aliens. And so given the need for housing and the way housing starts have gone, you would expect a continued rise in construction hiring And we have seen that, but everybody's thinking we're going to run out of workers at some point, but we haven't. So that may be the immigration impact at work.
Maybe skilled workers will run out of, but maybe not unskilled. Well, you do see, pickup trucks are still selling. That's always a good sign of housing, construction, plumbing, drywall, those types of jobs. But let's talk about something that the Bureau of Labor Statistics came out with just last week, and that was about unemployment rates in cities. And I found this curious. It said about 3/4 of the biggest cities saw a spike in the unemployment rate. What is it about the cities that we're seeing that as opposed to the rest of the country?
Well, the most generally accepted explanation for this is that work from home is still out there. And so what we're not seeing is people coming back to the service support jobs in the cities. If people are not in the offices, you don't need people selling them lunches, for example. And so that has caused a rise in the unemployment rate because those people aren't working from home. They're not working because people are not in the office to utilize the services they provide.
Well, let's get people back to the office. Maybe that'll help jumpstart things. The Labor Department's non-farm payroll report for May out on Friday morning. And our thanks to Michael McKee, Bloomberg International Economics and Policy Correspondent. All right, moving on now. This week, we expect to see earnings from Gamestop, the world's largest retail gaming and trade-in destination, and recently, once again, the world's best-known meme stock. Now, there's a lot to unpack about what's behind the recent rally in GameStop shares and its latest equity offering. And for more, we're joined by Jess Menton, Bloomberg News Deputy Team Leader and Senior Reporter, U.S. Equities. Well, Jess, it's been 3 years since GameStop became the epitome for meme stocks, along with theater chain AMC. Take us through what jump-started investor interest in the company. Shares on a roller coaster ride in the last few weeks, up 20% this year. What is going on?
Right. A head scratcher for a lot of traders when you think of the meme mania being revived, which really came in full force in the middle of May. So that started when we did see that pop a few weeks ago in GameStop, especially when you were echoing what people remember from sort of the heydays of when everyone was in lockdown during COVID. Maybe you got stimulus checks, like the stimmies and the tendies. That was kind of all the rage during the meme mania in early 2021. I'm sure people don't forget about that. Or diamond hands was another big term. So obviously, harking back to when we did see a lot of those, and also short squeezes that were going on with a lot of these names. So some of those fan favorites, when you think of GameStop, AMC, BlackBerry, Nokia, but this was really enforced when it comes to GameStop this month. But also, even with the pop we saw in the middle of the month, that stock the prior 3 weeks leading into that was almost up close to about 70%, but was a little bit under the radar because other things were happening with other dynamics with Carvana and some other meme stocks. But it really came into full force because Roaring Kitty, whose name is Keith Gill, I'm sure people remember this from 3 years ago. He actually had been off X, formerly known as Twitter, for a while, but then he started posting something. It was a Sunday leading into that week in the middle of the month. And so that was basically a signal, and some of the tweets he was putting out, that he's back. Maybe he's starting to trade some of these names again. You saw basically posts on Wall Street Bets on Reddit, some other platforms like StockTwits where retail traders were jumping back in. But the big question with this and the way some of the market dynamics and some things have changed was based on like a regulatory perspective, because if you think back to with Robinhood and some other brokerages where they couldn't execute a lot of the orders in 2021, and then it was at the end of January of that year, and it sparked a lot of outcry in Washington about regulations and people that weren't able to get out of certain trades because a lot of those brokerages were just so overwhelmed with the trades that what would happen this time around and if it would be different. And one thing that's really striking, if you look at the percentage of float, if you're thinking about short interest on this stock, it's only sitting at about a quarter. To put that into perspective for GameStop, at the height of 2021, it was over 140%. So that's showing you're not seeing the type of same fervor there. And also a lot of this might not necessarily be retail traders this time around. You're having a big institutions on Wall Street that also were getting on that. And to point out, we have seen a lot of that trade fizzle the last couple of weeks, even though we did see that pop earlier this month.
Well, things are different. And also, GameStop, I mean, they just sold about 45 million common shares. That is not a fluke.
No.
That's real money you're talking.
It's exactly. So as the calendar flips to June and we get the earnings results from GameStop soon, that's the question, because the shelf offering, and the big thing about this is if a company is trying to file to end up selling more shares, that would essentially dilute the value of the stock. So typically investors don't like to see something like that. So in the preliminary results that GameStop put out on May 17th, a part of a separate filing was that shelf offering. So now investors want to know, are we going to get more information, and when exactly would they be putting out and trying to sell more stock? And then also part of that too, they had a profit warning about a loss that they could have. And last year, because this is a company again that as people were transitioning to hard disks for playing video games to something digital, they really struggled in recent years. But last year they were able to have a more, especially turning a profit for that year. But then it looks like they're still struggling in the first 3 months of this year. So they did have that profit warning. And then you have the shelf registration. So that's something that investors are going to be really focused on once we hear their earnings results and obviously the company's conference call.
Well, have they said what they're going to do with that? It was $933 million that they got from that.
So part of it, and it's very kind of vague in the regulatory filing to the SEC. So a lot of it is in terms of general purposes. Some of it could be used for potential acquisitions. Whether that happens or not when a company's already struggling like that, most likely that's probably not where the money is going to be ended up. So it's something that when you had such a huge pop in that stock, so we had intraday trading on May 14th, it got as high as close to $65. Also, if you think back to where it was in 2021, way off the highs of that. And it's now trading close to roughly around $20. So it came into May being close to around $11. So it's doubled in value this month so far, but it kind of remains to be seen how long that could really last.
Yeah, who knows how long it could last.
Right.
But, May 12th, May 13th, it just skyrocketed up out of nowhere. So anything could happen. So we expect to see earnings. And do you think all these new investors, whether it's institutional investors or anyone, do you think they're going to stay with the stock? Does it have legs? That's the question, I think. And is the meme rally over?
Right, because we have seen that fizzled out. And also something else, Goldman Sachs has a basket of most shorted stocks. And so typically a lot of the meme names are housed into that. And we've seen that quite underperform the broader S&P 500 over the last couple of weeks since we initially saw that pop. So you aren't seeing, it almost seems as if when you're thinking about names like this, and even beyond that, AMC, Nokia, BlackBerry, Carvana, some of these have seen pops too, but it's fizzled out more so. So it's hard to tell if this would really have legs, but it seems as if right now we're not going to see what we would have seen 3 years ago.
Well, there's a lot to look forward to. Our thanks to Jess Menton, Bloomberg News Deputy Team Leader and Senior Reporter, U.S. Equities. Coming up on Bloomberg Daybreak Weekend, a look ahead to elections for the European Parliament and a monetary policy decision from the European Central Bank. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, we look ahead to China's PMIs and the Computex Taipei event featuring a number of AI heavy hitters. But first, to Europe, where inflation is down and interest rate cuts are on the agenda when the European Central Bank meets this Thursday. Meantime, voters head to the polls in elections for the European Parliament. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Stephen Carroll.
Tom, let me take you back to October of 2022 when inflation hit a peak of 10.6% across the countries that use the euro. Since then, the ECB raised rates to 4.5%, where they've stayed since last September. Now, in the coming days, as widely telegraphed by policymakers, we're expecting the first interest rate cut of 25 basis points, and that's because inflation has come down sharply. It also puts the ECB ahead of the Fed, a move that's drawn much attention. What's less clear, though, is what happens after the June ECB meeting. I've been discussing this with our senior euro area economist, David Powell, and started by asking him about the data that's in the backdrop to this rate decision.
If we remember going back to last year, after the huge rise in energy prices, inflation in the euro area was was reaching unprecedented levels. And that has come down considerably. We're no longer that far from the target anymore on either the headline or the core. So basically what's happened is the ECB put interest rates into very restrictive territory as a result of high inflation, and that has come down now. We've seen inflation, while still above target, come much closer to it. And basically the lower levels of inflation are allowing the ECB to remove some of the monetary tightening.
Talk to us about the bumps we've seen in the data, though, because it hasn't been a completely smooth downward trajectory for inflation. I mentioned the surprise in the German and the Spanish data as well. Are those causes for concern?
Well, in the most recent releases that we've seen, those movements are small relative to what we were seeing kind of a year ago or something. So when you take a step back and you look at the big picture and you remember that back in October 2022, inflation in the euro area was nearly 11%, and the reading, which was for April, was at 2.4%. So in the big picture is a huge process of disinflation has gone on, even if right now we're seeing some kind of upward surprises to the upside. And we do expect, even before the upside surprises that we had, we were already expecting euro area inflation to tick up a little bit in May, largely due to a base effect from transportation prices in Germany.
Let's talk about what happens after the upcoming meeting for the European Central Bank, though, because the rate cut has been largely telegraphed by, so many policymakers, including Christine Lagarde. But there's a bit of difference of opinion about what the ECB does after the June meeting.
That's right. The rate cut in June is basically a done deal. In fact, the governor of the French Central Bank used that exact phrase. He said it's a done deal recently in an interview, well, barring any surprises, is what he said. And we've had that same message from Lagarde and even the most hawkish members of the governing council, Bundesbank President Joachim Nagel, and others. So that does seem to be a done deal. And the debate has really moved on. And here the hawks are already coming out with their opposition. They're being very firm. We had Isabel Schnabel, member of the executive board, is from Germany, say she was opposed to a July move. We've had the Bundesbank president, Joachim Nagel, say the same thing, and others on that hawkish side of the spectrum. They basically want to quash any thought of a July move, and they're saying that we need to wait for this important quarterly data that we're getting in June, but we'll not get again until September. And that quarterly data is the most comprehensive measure of wage growth, which comes out in the national accounts, the GDP report, and that's available once every 3 months. Also, the ECB's staff economists only update their forecast once every 3 months. So they'll have all that data in June, then they'll have all that data again in September. And what the hawks are saying is July is just too early because we won't have enough information to make that decision for another move.
Is there any risk for the ECB in cutting now ahead of the Fed?
The risk that sometimes policymakers worry about is a sharp movement in the exchange rate as interest differentials change. But we've not really seen that. We're not seeing any movements in the FX markets that are particularly worrisome to policymakers. We look at euro dollar, the exchange rate. It's not anywhere that's very far from where it's been in recent years. And the Fed is probably not going to be too far behind. We at Bloomberg Economics expect the Fed to start cutting in July, and that's not very far after the ECB in June.
When we think about the rest of the year, or when we look beyond a second rate cut, how much could we expect central banks to start converging at that point? Or I suppose what I'm really asking is how long could divergence last, looking at the data that we have available to us now?
Well, the euro area is very different. The state of the euro economy is very different from the state of the U.S. economy. The U.S. economy, going into this inflationary surge, had this huge amount of fiscal stimulus. It was really absent in Europe. We had some fiscal stimulus, but nothing on that scale. And that really pushed the U.S. economy into overdrive. Unemployment was very low. And the economy has stayed very strong throughout this period of monetary tightening. The same cannot be said about the euro area. So, for example, last year, I think the euro area economy basically flatlined. There was no expansion in GDP. And in contrast to that, the U.S. economy expanded by about 3% or so. So the euro area is weak, and it's going to need monetary easing, whether the Fed cuts or not.
We're also looking looking ahead to the European parliamentary elections that are taking place in the coming days as well. Of course, economics going to be a key issue there as well, as it is in pretty much every election. Talk us through the economic situation that European consumers, European households are facing, because of course the rate cut, as expected, should come just as many are going to the polls.
Yeah, many consumers around the globe still feel that their budgets are being pinched by this surge in inflation because, say, a basket of groceries that used to cost 100 euros now cost 120 euros. And we're not seeing prices go down, so that's going to remain the same. It still feels expensive to several years ago. What's happening is inflation comes down and prices are just no longer rising as quickly as they previously were. So people still feel that pinch. Real incomes in the euro area have not caught up to pre-pandemic levels, meaning the inflation has outpaced income growth. We're seeing high wage growth in the euro area now, and probably over the course of the next couple of years, there will be a catch-up in real incomes to pre-pandemic levels, meaning that the growth in wages will make up for the purchasing power lost to inflation. Consumers will feel better about it at that stage, but around the Western world, where we have seen this inflationary surge, and other places in the world as well, consumers still feel that things are not great.
That was Bloomberg's senior euro area economist David Powell. So let's talk more then about the politics. Some 400 million voters across the European Union will be able to cast their ballots in the coming days to elect 720 members of the European Parliament. These elections will influence the policy-making course of the EU for the next 5 years and help determine who gets the top jobs of presidents of the European Commission, European Council and High Representative for Foreign Affairs. This at a time when the EU is facing economic and geopolitical challenges with the ongoing war in Ukraine, trade tensions with China and concerns over the bloc's competitiveness versus the United States. We've been speaking to many of the leading political figures in the European elections on Bloomberg Radio and Television and asking them about the key issues in this vote. Let's start by hearing from Nicolas Schmidt, lead candidate for the Party of European Socialists, currently the second biggest grouping in the European Parliament.
Well, the biggest issue in this election is the future of Europe. It's the decision about the future direction Europe will take. I think we are living now in a very different geopolitical, economic, global economic context. And this means that Europe has to be up to these new challenges. And this means also that we have to strengthen Europe in different areas, the economic, the technological, the green transformation, but also our defense. If this does not happen, really, Europe could be on the loser's edge.
The Liberal Renew Europe group is the third largest in the outgoing parliament. Hungarian MEP Katalin Cseh told us she's worried about the threat posed by disinformation in this election.
I have to say, as a Hungarian, we have been seeing signs of Russian disinformation every day ever since the war broke out. If I turn on the television, the state television in Hungary, all I hear is Russian propaganda. The Russian hackers were infiltrating our foreign ministry for years. The government knew about it and they did nothing. So Russian influence is here in the heart of Europe, alive and kicking, and we have to protect our democratic systems. We have to protect our citizens through establishing a strong anti-disinformation framework and to protect our security.
Her fears about interference are shared by the Greens co-lead candidate Terry Rinke from Germany. She's also concerned about a rise in support for far-right parties, which she suggests could jeopardise some of her party's climate initiatives.
What we are facing right now, if there is, for example, a surge of the far right, that the whole European project is basically going to be put in question. So that would have horrible consequences, but for Europeans, but I think also across the world. And one of the key issues that we will be discussing is how we continue with the Green Deal. So will we go down the path of climate neutrality that Europe has taken course on, or will we have a back and forth and basically go back and with that not only not meet the climate targets, but also create a lot of economic insecurity?
Now, we haven't managed to speak yet to the centre-right European People's Party. That's the group that Commission President Ursula von der Leyen belongs to. They were the biggest group in the last parliament. Their manifesto promises to focus on competitiveness, supporting Ukraine and what they're calling smart trade agreements with like-minded partners. Now, the EPP allied with the Socialists and Renew in the last Parliament to build their governing coalition. But ahead of this vote, there's been much focus about where else the EPP might look for support if they don't have enough seats after the election. One option would be the right-wing European Conservatives and Reformists. They include the party of Italy's Prime Minister Giorgia Meloni. Belgian MEP Johan van Overtveld is a member. We asked him whether he'd do business with Ursula von der Leyen after the elections.
Well, that will depend on what she comes up with in terms of her policy priorities, and we really want her to be a little bit more specific on that than what she has been telling us now. But there's, of course, a distinct possibility that we might support her. Yes, it's not a done deal, far from it, but it's a possibility.
What would you expect in return?
Good policies, that's the major thing, and especially with respect to Ukraine, defense and a few other things, like, for example, further adjustments in the Green Deal to better take into account, for example, Europeans' sorely lacking competitiveness.
That was the MEP Johan van Overtveld from Belgium. Now, you'll find a full list of candidates in the European elections on the Europe Elects website. And we'll have full coverage of the ECB decision and the European Parliament elections on Bloomberg Daybreak Europe in the coming days, including special programming from Brussels. I'm Stephen Carroll in London. You can catch us every weekday morning here for Bloomberg Daybreak Europe, beginning at 6 a.m. in London and 1 a.m. on Wall Street. Tom?
Thank you, Stephen. And coming up on Bloomberg Daybreak Weekend, a look ahead to the Computex Taipei event featuring a number of AI heavy hitters. I'm Tom Busby, and this is Bloomberg. I'm Tom Busby in New York with your global look ahead at the top stories for investors in the coming week. This week, we'll be getting a slew of trade data out of China. Also, the Computex Tech Show in Taipei, which coincides with TSMC's May sales and revenue release. Let's get to Bloomberg Daybreak Asia host Brian Curtis to walk us through all these upcoming events.
Tom, we look ahead to more economic data in China, including the trade numbers for May. The PMI figures came in a little disappointing, and we'll have more on that in just a moment. Meantime, the IMF recently raised its forecast for overall growth in China in 2024 to 5%. That's up from a previous prediction of 4.6%. The IMF said that reflects a strong expansion at the start of this year and additional support from the government. In an exclusive interview with Bloomberg's Haslinda Amin, First Deputy Managing Director Geeta Gopinath talked about the macro policy measures from Beijing.
We've upgraded China's growth by 0.4 percentage points for this year and for next. So we have growth now projected at 5% for this year and 4.6% for next year. There are two main drivers for that. The first is the better than expected first quarter GDP numbers that came out for 2024. That is lifting up our growth projection. And the second is we have incorporated some of the newer announcements that have been made on the policy front. So those are the two main reasons for the upgrade.
But some say 5% is actually out of reach for China. They say private sector sentiment is still weak. The property sector is also in the doldrums, 60 million homes still unsold, and some point to China Vanka under a lot of financial stress. At some point, Geeta, that is likely to weigh on confidence, weigh on sentiment, weigh on growth as well. What's your take on that?
So China's economy is continuing to recover. So we certainly are seeing that consumption is recovering, but still it has some ways to go. The strength we're seeing in public investment remains. Private investment is still weak, mainly because of the weakness in the property sector. So we are seeing signs of recovery, but yes, we need to see more evidence of that. But despite that, we do expect that growth will be around 5% this year.
What more needs to be done?
So firstly, I would like to recognize the policy steps that have been taken. I mean, the recent announcement, which involves upgrading equipment of firms, but also consumer goods of households, that can help. But yes, in our view, more will be needed. And so specifically on the property sector front, I think what would be very helpful is to deal with the problem of pre-sold housing. So there are a large number of houses that have been pre-sold but have not been completed. Here, we see a bigger role for the central government to come in to deal with that, to be able to complete those pre-sold houses. Because when that happens, that's going to help household confidence, which is really essential at this time, and also will help with the exit of non-viable developers. Secondly, in terms of providing support, while overall we think that there should be a fiscal neutral stance, I think it is important that the spending goes in the direction of helping low-income households, because they are the ones who are able to consume more of that additional income, and that will also provide a boost to the economy.
Geeta Gopinath there from the IMF. Meantime, China's factory activity contracted in May, missing estimates for expansion. The official PMI fell to 49.5 compared to 50.4 last month, and the forecast of 50.5. It's a warning sign that GDP may struggle to reach the government's target of growth of around 5% this year. Wendy Chen at GAM Investment.
This definitely come as a slight disappointment for the market, as people are expecting to see another month of expansion just to keep the theme of the past 2 months and supported by a kind of healthy order book on the manufacturing side. But however, we probably need to focus on what does it mean for the regulator to counter-react on that, because the PMI is definitely impacted on the pace of fiscal and the monetary policy to follow, such as the intensity of the monetary easing as well as the government bond issuance, which, to be frank, has been behind schedule a little bit.
And China is hoping that tech investment can help it with growth in the general economy. It's doubling down on its efforts to stimulate the domestic chip industry. The Big Fund 3 was just formulated at $47.5 billion of funding. SenseTime co-founder Bing Xu says the Chinese chip makers are catching up fast on AI. He spoke with Bloomberg's David Ingles at a UBS conference in Hong Kong.
The one that having a leadership in AI technology will be attracting a lot of customers to work with them. So I see that already in the US. A lot of customers working closely with leaders like OpenAI, like Anthropic, and I believe that in the Asian markets, there will also be leaders as well. So we try to be that leader. But of course, there are shortage of resource here in Asia. I think in general, it's like a 10 times of gap of the compute resources that we have here compared to the US leaders. But I think Asian markets never lack of talents and never lack of data. So in terms of talents and data, I think eventually we're able to make sure that we squeeze the last bit of the compute and then try to be there.
That brings up the topic of, and you mentioned you work with NVIDIA. You invested a lot, of course, in buying NVIDIA inventory. You know, of course, of these restrictions that the U.S. has placed on China's access to some of these technologies. Is that a problem for the sector? Is that a problem for you? How are you working around that, for example? And do you think that in any way constrains China's ability to meet its own AI objectives?
That does impose a challenge to everybody, not just the companies in China, but also companies in the U.S. In China, we also do a lot of fundamental innovation. We also publish a lot of papers. We do a lot of open source. See the open source models that we released recently. Our open source version of multimodality model called Inten-VL. Actually, it beats GPT-4 and we recently open source another one, a large language model that does really good on maths, and it beats almost all the models. We try to share what we discovered in Gen AI, in AGI in general. There are also domestic chips coming up that's catching up with international the chip leaders really quickly. And we're also working with these domestic chips to expanding the compute that we have.
How far behind do you think the domestic chip sector is compared to the West?
Well, it's hard to tell because I believe that in the long run, there will be a smaller gap. In short term right now, I think somebody says 1 year, somebody says 3 years.
SenseTime co-founder Bing Xu. And a lot of this will play out across the Taiwan Strait at Computex Taipei. It gets underway with advanced semiconductors very much at the heart of the event. We'll have a number of top executives there and CEOs in companies like TSMC and Qualcomm and AMD, among others, all in attendance. Joining us now for some discussion about the invisible threads that run through all of this is Vlad Savov, Bloomberg tech expert, San Francisco 49ers fanboy, and my favorite Bulgarian on the planet. Vlad, thanks very much for being with us here for this discussion. First, to some of the points made there by Bing Xu, is China catching up on advanced chip making and AI?
Well, that's tricky to say. I would put it that he is being very optimistic about the situation. One of the things that you have to look at is NVIDIA and its leadership in AI accelerators is largely uncontested, whether you're looking at the US, globally, or within China. And those key AI accelerators are the exact thing that the US sanctions have kept out of China. Its nearest competitor, AMD, also has its own offerings, and they have also been captured by those sanctions. So when you talk about the companies that develop the AI models, the ones that need these data centers full of the fastest and the best possible accelerators, in China, they don't have them because those are made by US companies. There are a couple of players such as Biren Technology who are developing their own alternatives domestically. Huawei has been made effectively China's chip-making development champion, and it did have that big breakthrough with a smartphone processor, but both of them still have a lot to prove on this front.
So we heard from Bing Xu there from SenseTime. I'm curious, because he referenced this, who will be the leaders of AI in Asia, in China?
Well, this is the fun thing, and this is what makes Computex such a compelling show. We don't know. It's still very, very early on. Now, when you look at NVIDIA's share price, you can say there's been a lot of impact because there's been a lot of buying already, but it is still very early. The likes of AMD can take the lead. Qualcomm, another one of these players, its CEO will have one of the highlight keynotes at Computex. It's making a big push into AI chips on devices, not in the data centers. So there's all of this opportunity, and it's still very early days.
We just had this announcement of the Big Fund 3, and I'm curious exactly how that funding gets deployed in China.
So am I, Brian. We're going to find out. It's $48 billion. It's not going to be just handed out overnight. It's going to require a bit of focus, I would argue, because one of the interesting things is when you look at the likes of TSMC, one of the big chip makers in Taiwan, Samsung likewise, they spend upwards of $30 billion per year in capital expenditure. If China wants to have its own competitors to those companies, it can't really just spend the money all across. It needs to focus. Maybe Huawei will be the focus of that investment, but it also needs to build out a wide ecosystem. One of the things that you hear from Taiwanese ministers and even the likes of NVIDIA CEO Jensen Huang is that there's a massive ecosystem around TSMC. It's not just TSMC as a single company. There are countless companies that create components, that put together servers, and do all the work that's required around the chip making.
So when you look at TSMC, you can tell the huge impact it has had on the Taiwan economy. And we talked about NVIDIA and AMD. And when you look at how AI is impacting investment in the United States and even growth in the United States, you can understand that point that we made earlier that China is looking for high investment and perhaps AI and semiconductors to help fuel the Chinese economy. Is that possible sometime in the next year or two?
Well, as I mentioned, it's still early days. I think the payoff on AI, likewise, early days. When you look at some of the polling, Lenovo, for example, did a polling of CIOs around the world, and many of them expect a year at least, maybe even 2, before they start monetizing their investments in AI. And that's globally. When you look at China with its economic challenges, with the US sanctions and everything else, I think the length of time that it's going to take to monetize these AI services might be even longer.
You're going to be at Computex, right?
Yes, sir.
What will be most interesting to you? What will you really be looking for?
Well, the big announcement at Computex is the thing that Microsoft and Qualcomm have already given us in advance. It's these Copilot Plus PCs, the quote-unquote AI PCs. The thing I really want to find out is how they justify that label. I still see it as marketing and branding more than actual end-user changes. But if there is a tangible advantage to all this AI that Microsoft is stuffing into PCs, we can see a real uptick in the PC industry. The pandemic and a lack of innovation have really kind of plateaued the PC industry for many years now, and Microsoft, Qualcomm, and a whole bunch of other companies are betting on AI being the driver to get people to buy new devices.
Vlad, thanks so much for joining us. Vlad Savov, Bloomberg tech expert, with us on the program. I'm Brian Curtis, along with Doug Krisner. You can catch us every weekday here for Bloomberg Daybreak Asia, beginning at 8 a.m. in Hong Kong and 8 p.m. on Wall Street. Tom?
Thank you, Brian. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.